You just got approved to drive for Uber. The app is live, your first ride is minutes away, and you are thinking about how much money you are going to make. But here is what Uber will never walk you through: the financial setup that separates drivers who build real wealth from drivers who end up owing the IRS thousands of dollars 9 months from now. The decisions you make in your first 30 days will determine whether rideshare driving works for you financially or becomes a trap. This video is your first 30 days financial checklist. 6 specific things you need to set up right now before the tax surprises, insurance gaps, and disorganized records start costing you real money. Welcome to the Freelancer's Wealth Blueprint. We help gig workers and freelancers build real financial systems so they keep more of what they earn. If that is the kind of content you need, subscribe and hit the bell so you do not miss the next one. Let's get into the checklist. Step 1. Open a separate business bank account. This is day 1 priority. Do not run your Uber earnings through the same checking account you use for rent, groceries, and subscriptions. When everything is mixed together, you lose track of business expenses. You cannot clearly see what your driving actually earns after costs. And if the IRS ever questions your deductions, you have no clean paper trail to show them. You do not need a fancy business account. Most banks and credit unions offer free or low-fee checking accounts. Some online banks like Lily, Relay, or even a second account at your current bank work fine. The only rule is that every dollar Uber pays you goes into this account, and every business expense gets paid from this account. That single habit makes taxes, budgeting, and expense tracking dramatically easier for the entire time you drive. Step 2. Set up a tax savings account and start funding it immediately. Uber does not withhold a single dollar for taxes. Every payout hits your account at full value, and the IRS still expects its share. The self-employment tax alone is 15.3% on your net earnings. That is 12.4% for Social Security and 2.9% for Medicare. Layer income tax on top of that, and most drivers owe somewhere between 25 and 30% of their net profit in total taxes. Here's the move. Open a separate savings account, and every time Uber pays you, immediately transfer 25 to 30% into that savings account. Do not touch it. That money is not yours. It belongs to the IRS and your state tax authority. If you earn $1,000 in a week, move $250 to $300 into tax savings before you spend anything. Drivers who skip this step are the ones posting online about surprise $4,000 tax bills they cannot pay. Step 3. Install a mileage tracking app and turn it on before your first ride. Your mileage deduction will almost certainly be your single largest tax write-off. For 2026, the IRS standard mileage rate is 72.5 cents per mile. If you drive 15,000 business miles this year, that is $10,875 in deductions coming directly off your taxable income. But here is the catch: the IRS requires contemporaneous records. That means you need to log your miles as you drive them, not reconstruct them from memory in April. The best free option is Stride. It tracks mileage automatically using GPS, runs in the background while you drive, and also helps identify other tax deductions. Everlane is another strong choice, built specifically for rideshare and gig drivers, with a free tier that covers 15 trips per month. If you want premium features, MileIQ and GridWise are popular paid options that many full-time drivers prefer. The specific app matters less than the habit. Pick one, install it today, and turn it on every single time you go online in the Uber app. Every mile from app on to app off is a deductible business mile. Miles driving to your first pickup of the day and miles driving home after your last drop-off may also be deductible depending on your situation. Track everything and let your tax preparer sort out what qualifies. Step 4. Put the quarterly estimated tax dates on your calendar right now. Because Uber withholds nothing, the IRS requires you to pay estimated taxes yourself during the year if you expect to owe $1,000 or more. The 2026 due dates are April 15th, June 15th, September 15th, and January 15th of 2027. Missing these is not just an inconvenience. The IRS charges underpayment penalties that start accruing from each missed deadline. Set calendar reminders 2 weeks before each date so you have time to calculate your payment and submit it through IRS Direct Pay or the EFTPS system. Your quarterly payment amount comes from the tax savings account you set up in Step 2. This is why that account matters so much. Step 5. Check your auto insurance today, not next month. This is the step most new drivers skip, and it is the one that can cost you the most. Your personal auto insurance policy almost certainly does not cover you while you are driving for Uber. There is a gap between when you turn the Uber app on and when you are matched with a rider where neither your personal policy nor Uber's commercial policy may fully cover you. This is called the Period 1 gap, and it varies by state. Some states require rideshare companies to provide coverage during all periods. Others do not. Either way, you need to call your insurance company and tell them you are driving for Uber. Some insurers offer a rideshare endorsement for an additional $15 to $30 per month that closes the gap. Others may require you to switch to a commercial policy. A few may cancel your policy entirely if you drive rideshare without disclosing it. The worst outcome is getting into an accident during a ride and discovering your claim is denied because you never told your insurer. Make the call this week. Step 6. Set an emergency fund target. Gig income is variable. Some weeks you earn more, some weeks less, and there will be weeks where your car needs repairs, you get sick, or demand drops. Financial planners recommend gig workers maintain 3 to 6 months of essential expenses in an accessible savings account. You do not need to have this built overnight, but set the target number now. If your monthly essentials are $20,500, your emergency fund target is $7,500 to $15,000. Start directing a portion of each week's earnings toward it, even if it is just $50 a week. Having that cushion is the difference between a slow week being an inconvenience and a slow week being a financial crisis. That is the complete first 30 days checklist. Separate bank account. Tax savings transfers on every payout. Mileage tracking app. Running from day 1. Quarterly tax dates on your calendar. Insurance gap closed. Emergency fund target set. 6 steps, all free or nearly free to implement, and every single one protects you from the financial mistakes that knock out new drivers in their first year. Subscribe for more rideshare and gig worker financial guides. We cover taxes, deductions, retirement accounts, and wealth building for people who work for themselves. See you in the next one. This content is for educational purposes only and does not constitute tax or financial advice. Consult a qualified tax professional for guidance specific to your situation.